Hello everyone, today is Friday, June 25th, 2021. My name is Evan. Welcome back to our weekly stock market analysis video. If this is your first time tuning into one of these videos or our channel, welcome. Thanks for being here. Thanks for joining us. Here's how these videos work. We break up our analysis into two parts. In part one, we look at everything that's going on this week in markets, things beyond just price. So we look at market internals and correlations, volatility, term structure, interest rates, and really sort of pick apart everything that stands out, looks interesting, and can help inform our price-driven decisions. And then in part two, we jump into the charts, we look at the charts, we look at those long-term trends and try and best position ourselves looking ahead. So hopefully that sounds good to you. I actually did want to remember to mention in this week's video, so I think it was 2 weeks ago, I asked for feedback from your feedback on crypto analysis, doing a video series dedicated to crypto, and I got essentially unanimous feedback on interested in that series. So I haven't forgotten about that. I am going to sort of think about how I can get that into the schedule amongst sort of everything else. So I got to try and pick a day. It would be a separate video. I don't want to make these videos even longer. So it would be like a Thursday or a Tuesday weekly series and sort of deep dive into that ecosystem. So I am thinking about it, haven't forgotten it, and thanks for leaving that feedback. So let's jump into some of the headlines from this week. I mean, the real sort of summary here is the bull market's back on track, right? We had last week a lot of disruption in sort of the universe with the Fed coming out and sort of, raising their inflation expectations, and that caused a bunch of sort of chain reactions in terms of dollar movement, short-term interest rates, and right down the sort of cycle on everything else that got impacted. This week we essentially kind of dropped that script, or the market just went back to sort of resuming a strong bull market. We had new S&P 500 highs this week along with Nasdaq, and I think the Dow may have got there as well, although no, the Dow is probably still off. I actually don't know. Yeah, the Dow is still off. So it's just S&P 500 and Nasdaq. And the Russell 2000, though, is what's most interesting because, again, that's been moving sideways. It got close to the top end of its range 2 weeks ago. Then it pulled back. Now it's getting back up there. So Russell looks good. VIX is back below 16. So there's lots of intermediate term good things happening to the market right now. In the short term, we are a little extended. We're going to talk more about that a little bit later. So let's look at the numbers here. If we take a look at the right-hand column here, these are very, very strong numbers. These are the 1 week performance. Dow Jones is up 3.5%, S&P almost 3%, Nasdaq 2%, Russell 4.5%, World Stocks 2%. So it was very, very strong out there. Basically 2 to 4% gains across all U.S. averages. If we look at market internals, equally as strong here, not quite the 4-digit number on the week. So we were getting some 1,000+ readings briefly a few weeks ago, back when this is the NYSE 52-week highs minus lows, sum it up every single day. Got 689 this week, and that is still a very, very strong number, not quite at the peak of sort of rate of acceleration as it was a couple months ago, but still very, very strong. Cumulative AD line positive all week, 3,400 stocks advancing on the week. That's also encouraging. And I saw some interesting statistics out there. I didn't really dig into them or validate them, but I did see that we have a bit of a discrepancy here with the S&P 500 index was closing at new all-time highs, but we had like one of the lowest readings in terms of the number of stocks over a 50 SMA, I think was the stat, or maybe even something like this, the 20 SMA. Still only 49% of stocks are above their 20 SMA, while the S&P 500 is at new highs. So it is a little bit interesting there, but it's kind of just another way to think about breadth and participation. So we'll keep an eye on that, but something I thought that was interesting. If we look here at our 52-week highs minus lows, sort of cumulative over the past 30 days, you can see this is a trend that is still continuing here up and to the right. We get a little bit kind of concerned in here, or just flagged it when it started to move sideways, but that only lasted very, very briefly. And you can see we're back up and growing up and to the right. So that is healthy undercurrent underneath the market. In terms of sectors, everything was green this week, and we had some big pop in energy, financials, and discretionary. So these are the things that got beat up and really sort of left for dead last week, because that was where we had essentially technology picking up the slack. We saw the inflation sort of sectors, areas of the market really take a dip last week, and then they came roaring back here. So energy on fire, financials, discretionary, all looking good. On the downside, utilities at the bottom of the list, still positive, but on the bottom of the list. Real estate second, relative underperformer, and then healthcare third relative underperformer. If we take a look at correlations, so I think the only thing that really sort of stands out to me, I mean, it's two things, and it's kind of the same things we've been looking at here. It's the dollar. So the US dollar here, which is this row, you can see the negative inverse correlations to a lot of things, frankly. And that just goes to show you, again, it gives you proof that what the dollar is doing matters. And when the dollar makes big moves like it did last week, all other markets feel it. Everything is tied to it. There is a ripple effect that occurs. So the dollar inverse correlation is pretty interesting. And then the TLT is also kind of interesting here, as well as it's showing its strong inverse negative correlation to lots of things as well. Not too much else new. These are kind of the same things we've been talking about, so I won't go any further on this slide. In terms of volatility, so we saw a very healthy week of volatility sort of disappearing from the market. We're closing at a 15.35 VIX. That is down quite a bit from over 20 last week. And you can see, again, that steepness is kind of creeping back in from the front month VIX to the 3 month. But still, generally speaking here, you're seeing VIX and fear come out of the market. That is overall a net good thing. Interest rates and credit markets. So yields were up across the board. You can see the 1-year yields right here were up about 5 to 7%. So that means bond prices coming back. Again, we saw a little bit of just kind of that inverse trade from last week, a little bit of a reversal there, but still yields climbing moderately across the curve. Investment grade bonds here, LQD was down almost 1%. We're going to keep an eye on that. It's a decent sized move. It's a 1 week occurrence right now, so I'm not going to make a big deal out of it, but it's something we'll just want to pay attention to there on that LQD. If we look at dollar and commodities here, so the dollar was down this week. So remember, dollar was up fiercely last week. So it's pulling back, kind of just consolidating and maybe working off that initial knee-jerk reaction to the upside. Dollar down, gold was up, silver was up, Bitcoin still down right now, 10%, seeing a lot of volatility. We got a nice move under 30,000, which was kind of a line in the sand. I think a lot of traders were looking at for Bitcoin, and we popped above it, and now we're kind of rolling back over to it. So we'll see, right now volatility is still kind of sticking around for BTC, and we're just trying to wait for that to stabilize. DBA down a little bit, crude oil very, very strong, natural gas even stronger. So report card on the week, almost all the check marks. The credit market still going to keep a little quick eye on that again, just marginally gets a strike. So it's an A- for this week in terms of report card. All things considered, it's a pretty darn good week for the bulls. If we take a look at our trading systems here, so a couple of things to point out and something that is definitely worth noting. So in terms of Merlin, I mean, you could almost say this thing is just doing the same old it's been doing. Now, underneath the hood, it is rotating amongst different positions, but it is, again, just staying pretty darn long and strong, this market, as it's been doing pretty much all year, and it's been greatly rewarded. It's having a great year. I think it's up over 20%. In fact, I know it's up over 20% year to date, so it's having a good year, and that continues to be more or less the same. Lamerick down here is something I want to point out to, because remember last week, this system, this short-term swing trading system, was a full 100% invested. It was fully long the market coming in last Friday. And of course, we had a great week. And so what this short-term trading system was doing all week was basically just selling a little bit each and every day this week. And increasingly enough, it ended up getting net short on Friday here. So it ended up now tilting to the short side. There's still a couple of longs on, but it is short the market in aggregate right now. And you can see that's just, again, a very different look from what Merlin's doing. So that's what's always interesting. And again, that's what I always try and say is, you know, last week we were 100% long in Lamerick and now we're short. So there's a lot that happens on a day-to-day basis. So just be careful when you are trying to follow anything, because I know some traders like to look at that for sentiment. But that's how I'm investing my dollars. And as a little heads up, I do believe we're going to be running a sale. We rarely run sales on trade risk, but next week I do believe we're going to be offering up a little bit of a sale. So if you are interested in these systems, do some reading on them, see if they're a good fit, and you might get a good chance to pick them up at a discount next week. So keep that on your radar. The best place to stay up to date with that is our newsletter. If you're not signed up for that, traderisk.com /newsletter or /trading-newsletter. A few different ways you should be able to find it on the site. Okay, that's it for me. Be back here in part 2 in just a second. All right, we're back. We've got TC2000 open here. We're looking at our equity market grid. So we have price itself is the white dashed lines, and the multicolored dots are a custom smart trend filter that we've developed for TC2000. Measures price and volume across time, and it helps us determine trend strength, path of least resistance. So when we look here at a weekly time frame, there's really nothing that changed this week. 3 out of the 4 markets are still in a bullish uptrend state, and it's just the Russell 2000 here. So last week it went neutral, and this week it is staying neutral. Even though it did have a 4.5% up week, we still haven't flipped back up to a fresh buy signal there. Again, the way we like to look at this is we give the benefit of the doubt to the prior signal. In this case, for the Russell, it was still bullish. So we're not, you know, freaking out here on the IWM. We don't have a sell signal or a sell outlook. We do think things are generally glass half full still while this consolidates. So that is sort of the outlook there on the weekly chart. If we go down to a daily chart, we definitely had some improvement this week. So for context, last week we had lots of, especially in the S&P and in the IWM, we had these neutral readings or neutral ratings on the market in the short term, and I'm calling the daily chart the short term, but in the short term we had the neutral ratings, and you can see as the week progressed we ended up flipping back up to bullish and produced some buy signals in the S&P on Wednesday and then on the Russell on Thursday. So that was encouraging to see. Nasdaq stayed bullish over the past few weeks, so no change there. And we did get a little bit of a transition up here late in the week in ACWX. So we did have a sell signal in international stocks for a short amount of time, and then we flipped back up to neutral here on Friday. So that's kind of our outlook there from a pure trend perspective on just keeping it dead simple, looking at price and volume. That's the way our biases are leaning. And now if we look a little bit closer at, say, candlestick analysis, we throw on some good old candlestick charts here, and we get a little bit busier and a little more specific in our takes. This view here, I think, tells most of the story for the S&P 500. It has been pretty range bound in here for the past several months. So since April, it topped out around 4230 or so, and then it chopped sideways. We tried to break out in mid-June. That breakout failed, and we pulled back. This was a couple weeks ago now, yet really last week, all the way down to around 4160. And then look at the V-shaped recovery this week. So this was Monday's action here. We came roaring back up 1.4% on Monday. That set the tone for the week as we just sort of grinded higher for the rest of the week and closed at new all-time highs. So the S&P 500 off to the races. There's no overhead supply, and we are now at fresh all-time highs. If we want to keep things simple, then, you know, this 4234 level is something to pay attention to. That's essentially the May highs. And if we want to keep an eye on sort of the June 14th high here that ended up rolling over or failing, we could use that as a very near-term sort of line in the sand to see the market stay above. But basically here, again, it's just a tough proposition now to be fighting and shorting this market. Broadly speaking, while it is trading up at highs here, it is certainly extended a bit in the short term. So if you're very tactical, if you're active, if you're something like our Lamerick trading strategy, which is very tactical and short term in its duration, and it's also it is picking individual stocks. It's not trying to short the S&P 500 outright. It is looking for weaker areas to attack. But that aside, the path of least resistance here is definitely to the upside here. And if you're tactical, then certainly there are opportunities. But broadly speaking here, this is a very encouraging week for the S&P 500. And so long as we're staying over, let's call it 4234 or so, you got to respect and like the action that you're seeing here in the S&P 500. If we flip over to the Russell, so the Russell here, remember, this has gone sideways for an even longer amount of time, and in fact, still going sideways. So since February of this year, it's been consolidating and chopping around sideways. We identified it here as an area to watch. We didn't say, let's get super excited and get 100% long up here. We basically said it's time to pay attention to the Russell now that it's back to the top end of its range, and we'll see if it can break out. That breakout never happened. It pulled back last week. Again, we got this V-shaped recovery this week, and we're right back up towards highs. So after this little V-shape here, it does feel like this is a pretty classic sort of rug pull here. It does feel like I would be more convinced now that this breakout will get underway in the Russell 2000. Again, that's just me totally, making or essentially calling a shot here, but I'm not necessarily acting on it. I still want to see price actually do it, and I'm willing to just kind of stay patient here, but it really needs to start breaking out over 234, 235, get those clearance to new closing highs, and then see if that can move off into the races. So Russell 2000, again, I think it's worth paying attention to. Again, if you look on this on a weekly chart, you can see just how textbook and healthy and strong this consolidation looks, and we'll see if we can get a breakout in the coming weeks. Nasdaq, if we finish there, you can see also has sort of rallied up to new all-time highs. It did have a V-shaped move, but remember last week, this was where the cheese sort of stood alone, where the Nasdaq was really one of the indices that didn't sell off or feel too much pressure last week. It was all the other indices, mostly all the other areas of the market, the Nasdaq, technology, semis, they all held up pretty well, and then they added to the gains and broke out this week. So that's it. It's, in terms of the overall market take, lots of encouraging signs to see here after the course of the 5 days, and the bulls are definitely in control on multiple time frames. Now, if we, I think, can just zoom right to, 'cause there's really not a whole lot of other interesting things to mention. TLT is pulling back a little bit. UUP, which is the dollar, is just kind of pulling back and consolidating a little bit. And metals are consolidating sideways here. So there really isn't too much else to say here. Silver is moving sideways. So let's just go right to our sectors and industries that were making some moves this week. Remember last week, it was all on the bearish side where we got this big list of stocks. We had like nothing on the upside here. So you can see now a little more balance, still only 13 sectors, industries. So let's just look through them real quick. I'm going to throw in a weekly time frame because it's usually pretty easier to kind of see the bigger move. So specialty retail, so let's just expand this as well. So you can see specialty retail, heavy volume this week as it closes back up to new kind of multi-month highs. Apparel stores, so again, kind of similar theme here. Retail also doing very well, breaking out to new highs this week, slightly heavier volume. Semiconductors breaking out to new multi-month highs, not quite the all-time highs here. Healthcare, so diagnostics and research, you can see also moving up, a little bit lighter volume, but still nice move on that industry. Healthcare plans, we saw financial, so this is asset management breaking out to new highs here. Look at this trend that has been underway for the past 6, 12 months, 18 months at this point. Footwear and accessories, so again, this retail trade is definitely a strong one this week. Real estate services starting to move up. Trucking getting a big rebound today. So you can see, look at the volume that came in here for industrials. This looks like a short-term bottom is trying to get put into place. More retail with consumer or discount stores XLK just outright breaking out to new highs here. So technology ETF closing at new highs. And finally, beverages, which is on the consumer defensive side, putting in a good heavy volume week. And SMH, which again is semiconductors, kind of breaking out here, attempting to, not quite closing at highs, but certainly at the top end of its range. So all of those kind of making notable moves to the upside, closing at multi-month highs or doing so on heavy volume. And then the only downside here is this real estate. So this is just general real estate, but you can see the heavy volume that came in this week. It was still a positive week, but we certainly closed much closer to the lows this week and looks a little bit suspect here if there's follow-through selling next week. So that's it. A little bit shorter in terms of market overview here, but there's not a whole lot to really point out when we look at trends. A lot of things are still kind of, in terms of commodities and some of the other macro stuff, didn't really change this much, but certainly stocks ended up breaking out and resolving to the upside. So that's all I have for this week's video. Thanks as always for tuning in and watching. I'd love to know what you thought about this week's action. Is there anything that stood out to you? Anything that you're paying attention to or you're doing homework on for next week? Leave a comment below. I'd love to hear it. Otherwise, thank you so much for tuning in, and we'll see you back here next week. Have a great weekend.